Good morning. This is Larry Edelson for my Uncommon Wisdom weekly market video update for Thursday, May 12th. I'm going to go right to the charts here. As so far this week, we've seen nothing but some sideways choppy action, which is pretty understandable considering the tremendous volatility we saw last week, especially in silver. So this week so far, the major theme has been letting the dust settle in many of these markets. So let's go right to the gold market and the chart there that I've been following for you. As you can see, we did get a rebound off this support level in gold that I mentioned last week. We have come back up to the 1525 level or so, and we're probably going to weaken and head back down to 1515 and retest this major support line here that I'm blinking on for you. That will determine the next fate of gold, the next move of gold. As long as we can hold that level, then we'll begin to see another leg unfold upwards in gold's bull market. If gold does not hold this level on the next test of support, then there is a risk of another decline below 1500 down to the 1466 and 1425 levels. Now, that shouldn't bother any of you. We're talking about a very insignificant decline in the broader scheme of things. Gold is headed well over $2,300, its inflation adjusted price, probably to at least $5,000, and my longer term target is really $7,700 per ounce, which we will not see for another 3 to 5 years going into 2016. That's when I expect to see the ultimate secular high for this gold bull market in the next couple of decades, or at least for the bull market that began in 1999. So long-term core positions are really positions that you shouldn't be looking at the price of gold every day. I know a lot of investors are getting a little bit nervous that gold's pulled back from its 1577 high. I'm seeing some of that on my blog and elsewhere. And really, I can't overemphasize how important it is to keep the long term in view and pretty much ignore the short-term gyrations, because the volatility, if anything, is going to get wilder in all markets in the next few years. And if you look at every single move in these markets, it's bound to emotionally cause you to make the wrong decisions, and of course it's very stressful and anxious as well, anxiety producing. So you don't want to do that for your core positions. On a shorter term trading basis, or if you're a swing trader, okay, you should be watching these markets every day, and hopefully I'll be giving you my insights there are helping you as well. But again, I just don't want anybody getting too nervous over what amounts to a lot of background noise in these markets. Having said that, let's go to the wildest of them all, of course, silver. If you saw my column in Uncommon Wisdom on this past Monday, you'll see that, again, I've given these warnings about silver. It's the devil's market, and it takes down a lot more people than it takes up. Silver is not a long-term type of core portfolio investment, in my opinion. It can be a long-term trading type of metal, but I'm much more secure with gold. In any event, you can see this crash in silver, which was nearly 34% in a very rapid time, one of silver's worst crashes ever, penetrated this important cyclical support line that I'm clicking on for you here. In the past few days, we've seen a sharp rebound in silver. We're back above that line, but I do not believe, I'm going to repeat that a third time, I do not believe that silver's correction is over yet. I do believe we're going to turn back down in hard, and we'll probably see a test of between $23 and $28 per ounce in silver before this correction is over. That's why I am not getting anywhere near aggressive in silver until I see that. Let's now go on to the dollar. The dollar is bouncing, as I've been explaining to you in the last week or so. I expected a cyclical bounce in the dollar. Cycles point to a rally, and indeed we have gotten above the first critical resistance lines here, this pink line and this downward sloped upper line of this channel here. The dollar is holding pretty nicely in here. It could fall back, basis the dollar index down to about 73 and change before rallying again, but I'm expecting the dollar to at least rally up to the 78 level, basis the nearby dollar index contract. That's not a big move. It has no bearing on the long-term trend for the dollar, which is substantially lower. Now to the Dow Industrials. Here I've been telling you to expect additional pressure to the upside. We indeed have gotten the bounce I'm looking at. We're getting a reaction rally. It remains, it's too early to say if this high back at 12.8 last week was the high that I was looking for, or we're going to get one more push higher. It does seem like we could get one more push higher, but time is running out on the Dow Industrials. Cycles call for a top in the next week or so, and we're likely to start seeing some important weakness develop in the Dow and as we head into summer. I'll have more for you on the Dow after a couple days more trading action. In any event, again, this week has been a kind of a let the dust settle week for all these markets. Please stay tuned. Until next week, have a good weekend, and please be sure to see my column in Uncommon Wisdom on Monday morning. Thank you. This is Larry.